Welcome everyone to the second episode of our series called Stocks Pe Charcha. Today I have with us a dear friend and a senior in the industry, CA Chartered Accountant Nag, who's a good friend of mine. And so Nag, how are you doing? And thank you so much for taking out the time for this.
I'm doing great, Abdullah. Thanks a lot. And thanks for inviting me so that we can have this kind of discussions. Because these will help us, or for that matter, anybody, to at least understand the domain of investments so that they can optimize their returns and optimize their wealth management framework.
Correct. Right. So you are based in Hyderabad right now, right?
Yeah. Yes.
If you can just in like 1 or 2 minutes give a brief background about yourself for the audience, that will be great.
Yeah. So I'm a chartered accountant, qualified in 2012. After that, I worked with Robert Bosch in technology domain, but I am passionate with markets for very long. Say even from 2007, 2008. Uh, and from then, like 2015, I started my CA practice. Alongside, I managed my own fund. So I thought, like, instead of, I mean, alongside managing my fund, why not this be turned as a business model?
Right.
So, what is a economical way of doing this? As we discussed before, so I found RIA is one. So I opted to take SEBI registered investment advisor, and from there we started building this business. So we have been doing well for the last 1.5 years.
Fantastic. And how is the investing public in Hyderabad?
Investing public in Hyderabad is a prototype of India. See, we have just 3% active retail investors in India at this moment, when compared with 55% in USA. In India,
Right.
still people are more tilting towards real estate for
Hmm.
for tangibility maybe, but liquidity is a concern though. But equities is like still a suspicious product for them to invest into. So,
Hmm.
but actually things are changing. Okay, we are in the right direction now. Okay, the young youth, even people of 35, 40, and market's doing well. That is going well with the people. So they're coming forward to invest. And first of all, the main change I have seen is people before never used to think that financial planning is a separate exercise and which needs
Right.
an expert advice, right?
Hmm.
Now actually they are coming into a zone where, okay, this has to be outsourced to somebody like us, so that they can leverage their time, their expertise, for that matter anything. So that's actually a good change.
Right. And I think especially in the last 3 4 years this change has happened quite a lot, especially post COVID. Right, people
COVID,
have started investing.
see, COVID did what? covid uh, COVID
Accelerated a lot of things.
exactly triggered that momentum in the retail
Right.
domain. Okay, we know that phenomenal increase in demat accounts. Uh, though there is a big, huge crowd who are going with this option trading. Okay, which is not actually a good sign. But
Hmm.
there are people who wants to invest into to invest for long term and make good money.
Right. I think you mentioned about option trading, which a lot of people are into. Obviously, 99% of the people are going to lose money over there, but a
Yes.
big chunk of that will eventually realize that long-term investing is the way to go, and then they will sort of filter down or trickle down to the investing class.
Yes.
Uh,
Yes.
right.
Option trading is something to do with the adrenaline and nerves, right? That's like
Hmm.
an addiction. Okay, you will not get that adventure feeling. Okay, if you are trading or if you are investing into the stocks, right? Because
Correct.
that's a very patient, long-term game.
Correct.
Where options is like you do or die in a day. Okay, that gives the kick. Right?
Uh,
The youth,
people do it for the thrill of it, basically.
exactly. So that 20, 25, below 30, okay. So they are more tilted towards this zone. You know, right? I mean, see, that's a pure, um, zero sum game, right? It's a negative sum game, as you know, right? I mean, if you have 10 people in the room, so probably the money will get shared between these guys only,
It
and
just
a
gets
chunk of
reshuffled. It just gets reshuffled. No one
yes,
actually. There's no
no one
net gain.
exactly no one creates value there, right? The only
Correct.
value will be your SEBI, your NSE, BSE, okay, your
And the broker.
broker, and your government at the end of the day, right? They are
Yes.
the actual value creators. So when it comes to stocks, say for example, okay, I invest in a company, the company utilizes that capital, right? That will get deployed. He will pay salaries to the employees, right? And he will
Mm.
feed the vendors, right? The
Correct.
customers who buy from this company also will get benefited because they are deriving some value from these guys. And even if you see the small time vendors, okay, around this company, okay, they sell tea, chai, samosa, whatever, even they create value. So there will
They
be
know
no
that value chain, basically. Yeah.
exactly, that's the value chain, right? So that is where
Mm.
everybody will win, and we have to be in that zone, right?
Right.
So we have to identify and we have to see actually whether this domain is creating value or not, first case,
Right.
right? So that's why you have to be in the equities. Okay,
Mm.
you hold for 6 months or 7 months or 6 years, but you have to be in the equities.
Absolutely. Absolutely. So let's talk about what sort of expectation should a retail investor have, uh, because in India people are very value conscious. मतलब अगर कोई 10 रुपए भी निकालता है, so then they think what am I getting in return. And even in small items, Indians love to bargain because they love getting value, right? So how would you explain to somebody who knows nothing about stock market, like why should he invest in the stock market?
Right. Say, for example, let's take Bajaj Finance for that matter,
Yeah.
right? See, if you see the revenues in 2015, right, they were around 6,000 crores.
Hmm.
Okay, and they're making a profit after tax of around 900 crores, for example. I may not be right exactly, okay, but that's the PAT they have. See, how what is a company or what is the value of the company? It's nothing but some multiple into your PAT,
Hmm.
right? To be
Gotcha.
very very lay, okay, so
Yeah,
meaning
yeah,
what? Yeah, yeah.
yeah.
I am a Bajaj Finance, okay, I am doing a PAT of 900 crores, okay, somebody will come and say that, okay, guy, bro, I want to buy you at 20 times, right?
Right.
Right now, why I'll buy you at 20 times, right? The only question here I have as an investor is because I anticipate the growth in the revenues, right?
Right.
Right, because why I have to anticipate the growth in the revenues? Okay, there are two complementaries in India. Okay, one is inflation, right?
Hmm.
Inflation indirectly increases your revenues, right? Another
Yeah.
thing is the demand side, right? See the consumption in India, okay, that's going huge. And this microfinancing, you buy a fridge on loan, okay, right? You buy a gold chain on loan, right? You buy even we buy apparel on loan, right? Okay, so whatever
Right.
it is at the end of the day, right? So this domain is getting huge huge attraction. Now say for example, these guys have utilized that mode, okay, and next, if you see now, they are making revenues around 60,000 crores, okay, and their PAT is around 10,000 crores, for example.
Hmm.
So why a common man has to invest is the simple reason, right? I buy the company now, okay, at this valuation today, anticipating these valuations go up. Why these valuations have to go up? Because the revenues are going to go up,
Yeah.
right? So you have to invest in a company and see for the valuations to go up, supported by the revenues. Obviously, if the fundamentals go up, I mean, if the fundamentals shine, obviously the valuations will shine. Maybe today or tomorrow. Okay, all these crisis in the middle or crisis on the way. Okay, they are all bubbles, right? I mean, they just go off. Okay,
Hmm.
so we have to wait for that. So now what happens? Revenues have gone up by 10 times. Okay, PAT has gone up by 10 times. And now, the PE was 20 then, now it is 30. Even PE got stretched because of the potential that Bajaj Finance shows. Now the
Right.
stock has gone up by 15, 20 times in 10
Right.
years. Right,
Hmm.
so we have to have this market awareness. Okay, you need not be so much into our depth into you need not dive into the fundamentals of the company, but you have to understand at least when you go shop or when you see, you have to see the market trends. Okay, whether are there any listed companies in that space? Okay, whether can we go and buy a chunk of it? Okay, it need not be you. I have 1 crore net worth. I need not invest 1 crore on it, right? I mean, like, so I can again plan it accordingly, and I can just put 1 lakh into it. So surprise may
It
come from any of this
basically
50 crore discount.
right. Basically, why a retail investor should be in the market is because he should own a chunk of the economy,
Exactly,
or,
correct.
or a chunk of the economic machine that's driving
Exactly.
the
Exactly. So why they have to invest? It's again simple logic, as you know, right? See, we growing at 7% per annum, right?
Hmm,
So we have a good benchmark called China,
right,
right? They are at $18 trillion GDP.
right.
We are $3.5 trillion, right? If
Hmm,
you take this world as a box, okay,
hmm,
our standard of living is 1/4 of the somebody's standard of living, for example,
right.
right? Meaning what? If you want to go there, India has got to do lot of consumption. Meaning what? If we grow at 7% per annum, okay, it's imperative that the corporate revenues are going to grow at 12% per annum for sure,
Of course, yeah.
right? If the revenues are going at 12% per annum, my valuations are also should grow at 12% per annum. If my revenues are going at 12% per annum, obviously my valuations also will grow at 12 to 15% per annum. If you do a bit more exercise, or if you do a bit more research onto it, if you can get good stocks and stay with them for a very long while and let the compounding come and take the effect, obviously you are going to make 4 5 times in 10 years, and with the dividends coming maintenance free.
Right,
Unlike real estate where you have to construct, you have to maintain, you have to do a lot on that part.
right.
So this simple, exactly as you said, uh, you have to own a part of the economy, which is the best economy in the world.
Yeah, in terms of growth right now, right.
Exactly.
Fantastic.
And
I think it was a yeah. Please.
and with the potential India has, next 25 years, you even you invest in Nifty 50 and sit down there, even you go with an index fund, you are going to
Hmm,
make 12% per annum. And that's
right,
what we did it in the last 10 20 years as well, right?
right, right. So just connecting with that aspect of Nifty 50 in investing. So let's cover the topic of active investing versus passive investing. So one way is that a person simply invests in an index, whether that's the large cap or the mid cap or some benchmark, and the other is active stock picking and creating a model portfolio uh, based on certain preferences. You know, some people might have some preferences, the other people might have other preferences. So, what would you say on that front? What are your thoughts on that front?
See, whether you're active or passive, you have to do your basic research, right?
Of
If you are a,
course, right. Even passive investors needs to do research.
exactly, the passive investors have to do a research in such a way that where his funds shall go, right?
Right.
Right.
Mm,
So who is the best fund manager available? Okay, what is the best fund available, right? And again, he has to understand what his risk appetite is all about, right?
mm,
Okay, so in bad times, okay, he should be supposed to see a specific fall. Okay, if he's only ready for that, then he has to go with an aggressive small cap, for example, for that matter,
mm,
right?
mm.
Okay, so this basic study is very very imperative for both the
Correct.
uh, both the categories. Okay, now if we talk about passive investing, so you have to understand what a mutual fund is first thing, for example,
Mm,
or a
mm.
PMS is
Right.
for first, right? Okay, and then he has to again filter it them out. Okay, whether that fits his appetite or not. Okay, and accordingly he has to just put in, and he has to leave things to the fund manager, or the mutual fund scheme or whatever, right? And he need not diversify so much. Okay, if he understands the market, or if he understands, or if he studies the uh, basic things of mutual fund industry, okay, he need not diversify also so much. Okay, he can just aram say take one large cap fund, one mid cap fund, and one small cap fund, right?
Mm,
Okay,
mm.
these three things will do well for them. So passive or active, they have to do research. When it comes to active guys, these guys are in a dangerous zone, because what I feel is, see, the best zone to be in to make money for you is the expertise you have built for the last 10 years, right? if you are a techie, okay, you spend more time on your own technologies so that you can make more money over there. Okay, unless you have so much time to spend, okay, you need not come here, okay, spend so much time, okay, do some
True.
trial and errors, okay, lose good time of 5 6 years where you lose that compounding effect, okay, and you do nothing, okay, because I've seen people managing their own money and do nothing, right? 5 years,
Right.
they listen to some news, okay, they just invest on it randomly, okay, they listen to some news, they invest on it. End of the day, okay, their portfolio will end up in such a way that they will be allocating only 90 or 85% of the money into three falling stocks, where the other
Right.
10% will be sitting in the profitable stocks.
Right. Right.
Right. So active investing is a very, very what do you say?
Professional area. It's a professional area, and
Ah,
non-professional should be very careful when charting into this territory.
correct. And this world is built in such a way that we are all experts in different domains. Okay, we have
Exactly.
to make uses of them, or in the sense we have to leverage with these people. Okay, I don't want to do carpenter because I don't know it, right?
Hmm. Hmm.
I'm not good at it. Okay, if I have to do it, I have to learn it, I have to do it, and I don't know whether the output will come well or not. Also, right? Right.
Right.
So, active investing is, unless you are into the market, unless you are a professional finance or fund manager, otherwise, active investing
Basically,
is not.
basically, if someone wants to do active investing, then they should delegate it to somebody who is good at active investing,
Exactly.
professional. Right.
True. Exactly. Exactly. So, active or passive, they have to do their own research. Active guys, active guys, as said, like, okay, they will have to lose good time.
Hmm. Hmm, 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 hmm. Right. Right.
Because right, see, if you leave 3 years in the market, okay, good time where you see that 40 50%, and from there, what, next 15 years, okay, your compounding will get diluted,
Right. Permanently diluted in a way.
permanently diluted, exactly.
Hmm. Hmm.
Right. Initially, when I was young, I used to think that options are the avenues of making so much money. Okay. Even Warren Buffett used to say options are the financial weapons of mass destruction. Okay. Then we don't even listen to that big wise man's advice.
Hmm.
Right. He's such a proven man, and he hardly grows at 22% per annum.
Which
Right.
is pretty good at it from American standards, right?
Exactly, exactly, exactly. Even in the Indian standard, 22% is something really great. Or a
Very
period
good.
of time, or a 30 to 40 year of span, okay, 22% is
Right.
something phenomenal. See, if you grow at 25% per annum, you are going to make your money 10 times in 10 years.
Right.
In 20 years, you are going to make your money 100 times.
Right.
Right? See,
This,
30th year, like you are making money 1,000 times. That's huge, right? A guy who can start at 20, by 50, even if he has a crore today, he'll be making 1,000 crores. Being
even if he
passive.
has 2 lakh, he'll make 10 crores.
Exactly. So
Hmm.
being passive, and the markets, right? Okay, they are highly scalable, right? You can go into
Right.
different category and different sectors. Okay, you can put so much money into. So so the active investing is something people has to ponder about before really getting into it.
Right. 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 Acha, I'll just bring out one point which I think is very interesting when people invest in stock market. They kind of forget this, is that we're talking about 20, 22, 25% return, which is actually in the long term, that's the higher end of the spectrum, right?
True.
But even if you look at the base level return, which is let's say 12 to 15%, let's say 12%, even that is pretty high when when you see that the rental yields in India are around 3%, right?
Yes.
In India, people love buying a flat and giving it on rent, or buying something and giving it on rent, right? They'll buy a flat worth 50 lakhs from which they'll get a monthly rent of 20 25,000, which is 3% or something like that annually. You get 4 times your rent amount in an index fund.
True.
This is something people don't
No,
realize.
I'll just correct it here. Say, for example, I buy an apartment with 50 lakhs.
Yeah.
Or I'll give an example where my sister bought an apartment, or my sister's father-in-law bought an apartment in 2004 worth 5 lakhs.
Hmm.
Or say, for example, 6 lakhs.
Hmm.
Okay. It has been giving him almost 3% per annum yield.
Yeah.
right? And after 20 years, okay,
The
now
capital gain is there. Yeah.
after 20 years, they have sold it around 30 lakhs.
Okay.
Okay, meaning what? It has grown at around 9%, 8 to 9% per annum, right?
Okay.
Plus your 3% yield.
Hmm.
Let's factor in the cost of maintenance.
Yeah.
Take that of 1% per annum, right?
Hmm.
So they will fall around 10%, whereas equities are going to give you 13%.
At least. Yeah.
Exactly. But the apartment in the next 10 years, I mean, they have sold it after 20 years. That's why they could get the rate of 8 to 9%. If they are selling it after 10 years, probably that may even come down,
Right. Right.
right?
Hmm.
So now the thing is, so whether you will opt a liquid channel, okay, to make more returns with around 12 to 15%. And again, right? See, for example, we'll take one more example. SBI for the matter. Okay. Last
Hmm.
20 years, SBI see, you can trust SBI, right? When you're putting FD into SBI, you can trust SBI.
Right.
You can invest into SBI. You can own a chunk of SBI. SBI has given 15% returns.
Annually
CAG.
compounded. Right.
Tag, exactly. And they give a dividend of consistent dividend of 1.5%.
Hmm.
So how much it is coming around? 16.5%.
Right.
So okay, again let's factor in the tax.
Hmm.
Okay. You take off your 10% long-term capital gains. Again, it's coming around 15%.
Right.
Right. So what is the story that you'll believe in? So whether you'll put a big chunk in one part of real estate, okay, or you will invest in an asset, okay, which can be tagged to the economy.
Correct.
If SBI fails, right? I mean, anybody comes for that matter. Any government has to come and recapitalize it.
Correct. Correct. Too big to fail,
Too
basically.
big to fail. Exactly. Right. So this analogy of investing in this rental yielding real estate versus your equities, I'll go with equities because simple. For me, I have a chance of diversification here. So I just don't have one SBI, right? Okay, I have HDFC Bank for that matter. HDFC Bank is giving me again 16, 17%, and again some 0.5% maybe dividend, right? Okay. And I have 50 or 60 good companies to invest into, right? I this particular real estate may fail maybe, okay, but not my economy. Abdullah.
Hello.
Yeah.
I'm sorry, I just lost my Wi-Fi connection. We can continue.
Yeah. So what do I prefer? I don't prefer a single chunk of real estate where I can easily diversify my chunk into 50 pieces and go with the economy, where the
Right. Right.
probability of success is very, very, very high over there.
Exactly. Exactly. Okay, so we have sort of in this discussion made a very valid set of points about investing in equity versus investing in real estate. The next big contender, you
Gold.
know, for Indian public is gold, right? And gold has also given uh, pretty decent returns over the last 10, 15 years. But if we sort of I think it's around 9 point something percent for the last
I did
10.
a small calculation for the last 20 years. They are giving around 8.5.
Okay. Okay.
Okay, around. Okay, we can take 9%.
But
Right?
the thing, so I'll make one point about gold, and then you can elaborate on it. That this rally that gold has had is actually not a very has not been for a very long stretch of time. This has only been for the last 15 years. And if you look at a chart of the last 50 years, let's say, or the last 100 years, then there has been huge periods of time when the gold has been in consolidation for a very, very, very long time, right? So it's not like a lot of people in India, they believe कि भाई गोल्ड तो एक पक्की बात है, उस पे तो
Hmm.
लॉस हो नहीं सकता, उस पे तो कुछ कुछ आता रहेगा. So that is actually not the case if we stretch our history to the last 50 years, right? So what are your thoughts on this?
See, that's what I see that as one of the asset classes where we can allocate some money. Okay, but not entirely.
As a part of portfolio diversification, we can
Yes,
definitely have
yeah,
gold as part of our equity portfolio, as part of our portfolio. But
exactly.
in India, people जितना पैसा जमीन को खरीदने के बाद बचता है वो सब ज्वेलरी में चला जाता है.
See, that's what exactly we have to understand two things here. Okay, one perspective is whether you are buying gold for investment or for your wearables, right? For the
Hmm.
fashion. Right? If you're buying it
Correct.
for fashion, that's not investment. Your wife will not going will never sell it out, right? Investment
Correct.
is something like you are investing it with a purpose, right? I want to make a corpus, right? And it should be readily saleable for you. Okay, if you're buying gold for your wife, and it's not an investment for sure.
No, but like a lot of people buy gold, ki bhai, we can wear it as an ornament, but at the same time, whenever we want to sell it off, we can sell it off and we'll get a decent profit if we sell, after a few years, let's say. So it has a dual purpose with for the Indian public in a way.
Exactly, they can pledge it at least like at
Mm-hmm.
8 to 9% again. Okay, so that's what it can definitely a good asset. And as from the perspective of our Indian mentalities, that asset actually has to have some place in the portfolio. So a 10-15% of the whole net worth will do well. I mean, not more than 10%. I believe.
Correct, correct. So I'm just let me just share the screen for just a minute. I have this gold price chart with me. Uh, can you see the screen?
Yeah, yeah, yeah.
Yeah. So if we if we look at from, let's say, for the last 10 years, as I said, right? So
Oh.
from November of 2015,
Can we change that into years instead of months?
just a second.
Uh,
You want one candle to be a month or a
one
year?
candle, 12 months. One candle to be 12 months.
Okay.
Yes.
Right. So we can see that the gold has constantly been rallying since the last 10 years, right?
Mm-hmm.
Since 2015, exact to be precise, it has gone up how much? It has gone up by 94%, 95% in the
Mm.
last
Yes.
10 years. So that
10
has
years.
sort of, in people's sort of illusion, in people's memory, gold is something that has been giving good returns. But if we sort of look at if we zoom back, then there are huge periods where gold took time to recover its all-time high. And if you look at this period
Mm.
since 1980,
Mm.
right? So since
Mm.
1980 to 2006, the total
Mm.
return over the last 26 years was zero,
Mm.
right?
Okay.
It has
So
been
what's the
in
price at
consolidation.
84? Price on 84? 81, 8, that is 80.
January 1980,
Mm.
right? So
Mm.
1 ounce of gold was $586,
Okay. Today?
and 26 years later, it was at the same price. So it was in consolidation for 26 years,
Okay.
right? So the point I was trying to make is ki people assume that gold is some sort of a safe haven, which is not the case. Gold
Uh,
also
uh,
experiences a lot of volatility. So this is a monthly chart,
okay.
so you can see the ups and downs. तो
Mm-hmm.
ऐसा ऐसा नहीं है कि equity में ही up and down होता है और बाकी gold तो बड़ा safe है. Gold also experiences ups and downs,
Exactly.
as you can see with the chart.
Then what is the reason that people are so much ignorant about this volatility? Just because of their emotional tilt towards gold? What do you think? I mean, have you ever pondered on this thing?
I think if you read the history of money, numismatic is the field, right? Uh, so gold has historically, for thousands of years, has been the store of value. People have used gold coins and silver coins as store of value, as exchange, as a currency, or vaults may traditionally, the emperors and kings, they all had gold. Rich people had gold with them, right? So this, like human psyche, we have evolved, over the last hundreds and thousands of years to perceive gold as a store of value. And in all cultures, in all ethnicities, gold is always seen in their own traditional books as something which carries value.
Mm.
So I think it's part of the culture. That's why,
Part of the genetics now. Our
part of
investing genetics.
right. But isme one interesting point is gold. So people might not know Bretton Woods, right? So Bretton Woods is when the monetary system of the world changed, and we
Mm.
kind of shifted from the gold standard to the fiat currency.
Current
So
systems.
so after, like at the time of gold standard, when gold was the standard unit of value, and every central bank in the world had gold reserves and only print currency up to the level of their gold reserves. At that time, gold was gold, according to the historical understanding of gold. But after fiat currency, Federal Reserve and central banks can print as much as they want. So then gold becomes just like any other commodity,
Mm.
and whose price is determined by supply and demand and nothing
Yeah.
else. So this is a key change that happened, I think, after 1971 or something, right? When President Nixon finally took dollar uh, off the gold standard. So this is one big change that has happened, which people don't realize, and the price of gold has actually been very volatile and has shot up a lot. क्योंकि भाई dollars इतने print हो गए, trillions of dollars have been printed. So then obviously the gold is going to equate the equation. So that's another aspect people believe, that people miss out. Gold is not going to behave in today's monetary system the way it has behaved over the last 1,000 2,000 years.
Correct. So can we do a small math of what is the CAGR of gold for the last 40 years?
Yeah, sure. Let's do that. There is a tool, right, in TradingView.
Yeah, you just tell the prices. I can calculate it in simple Excel ones.
Okay, I got the tool. Let me see. Otherwise,
Okay.
I'll just share the price, and you can.
Yeah, just share the price for me.
So last 40 years, right?
Yeah.
So 2015, 2014, 2004, 1994, 1984. So 1984, February 1984. Let's see. So the price was around $380 per ounce.
Okay. Today's value?
Today's value is 2035.
It comes to 4%.
There you go. Right. So it's just 4% that people are going all crazy about.
Exactly.
Fantastic. So I think now we have covered some very important and very interesting ideas, right? Active investing versus passive investing, growth versus value investing. Oh, this is one topic that we had to touch upon. So I think we can do that. This is the last topic for today.
Yeah.
So right now the markets are in the rage completely. Like the markets are soaring high, and people are throwing away Warren Buffett's philosophy and margin of safety. No one wants to read Intelligent Investor by Ben Graham.
Mm.
Everyone wants to do high growth investing. So can you throw some light on what is value investing first of all, if you can explain in simple terms? What's growth investing, and what should be a more balanced approach between the two?
Uh, See, for me, value investing is like there is a large cap company, for example. Okay,
Hmm.
right? I'll be waiting for it to correct to an extent that it sounds a valuable thing for me, or a bit of cheap for me when it
Hmm.
is related with its value. Say, for example, now HDFC Bank, I see, for example. Okay,
Hmm.
now I can see that as intrinsically valuable for me. Okay, because I
Correct.
see the potential coming forward. Okay, whereas the
Hmm.
stock is buying at that price for very long.
Hmm.
Right, maybe they might have some problems, but the only assumption here is, okay, they are going to cut down all the problems and they're going to come very strong. So
Right.
this is the time, this is value investing for me. Okay, so identifying the value, okay, within such big companies, okay, where we can get a stock with a margin of safety. Okay, so that's the point, I'll try to buy into it. Okay, and I'll stay with it. Right, so ideally value investing is into companies, okay, where usually any macro thing or macro crisis will not affect them so much. Okay, they will not have so much volatility into it. Right,
Hmm.
so when it comes to growth, growth is like, come on, now see the company, okay, which can fire in the next 5 years, okay, in terms of fundamentals. Right,
Hmm.
like say for example, we discussed Bajaj Finance, right, that 10 years back thing.
Hmm. Hmm.
Okay, right, so can we identify that? Okay, so these are all growth stocks for me, okay, where their growth, their revenues go 30% upside, 40% upside. For that matter, in last 7 years Titan has gone up by 35% per annum. Okay, that
Right.
that was growth stock for me. But at one point, okay, that was a value investing stock for me in 2016, 17 times, where things were very bleak for them. Okay, where the price has gone down so much. Okay, but the price that you can get it is relatively less when compared to the value that you can acquire. So value
Hmm.
investing and growth are like, they're a bit of mutually interactive, right? I mean, they'll be found in everywhere. So ideally speaking, now if you want to create a portfolio, so probably value investing, if you prefer value, I mean, if you want a value investing thing to be done into a portfolio, then we have to go with certain large caps where their value is much more higher than the price we can buy it for. And as well the growth stocks, where irrespective of the value, I mean fundamental, I mean investing, I mean the P's, the multiples, anything, right? I mean, so you anticipate the growth coming in, and so you invest into it immediately.
Right. Right. Right.
So growth is like trend for me,
Hmm.
right? You capture the momentum. That momentum can last for even 5 6 years.
Correct. Hmm. Hmm. Hmm.
Value is something. Uh, it's a hunt. Okay, you have to wait for it to come. Okay, you have to filter down certain things, and you have to see the value in it, and then you go for it.
Right. 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 So, for there's some of the viewers who might not understand the basic definition of value and growth investing. So, I'll just elaborate on that further. So, value investing is basically when we try to buy something with a margin of safety, right? So, if we see a stock that is trading at 100 rupees, but we believe that the intrinsic value of the company, based on that, the stock price should be 150, let's say. So, the price currently is less than the value, so then we will buy. That is value investing. Obviously this is not objective, this is very subjective, everyone has
Exactly.
their own calculation. But the point with value investing is your first priority is not lose money, right? Because if you are already buying at a price which is less than its value, then even if the markets go down for a while, your downside is protected because you already bought cheap, right? And when things go good for the company, then the upside is the clear sky. So that is value investing. And Warren Buffett and his teacher Benjamin Graham, these people are, known to be value investors, and they are the one who sort of popularized the idea of value investing globally. On the other hand, growth investing is when you don't care so much about the current price of the company, you don't care so much about the current valuations of the company. What you care about is how fast is the company growing in terms of revenue, in terms of, sometimes the company might not even have profit, but the revenue is growing and the user base is growing, the products are growing, so you buy into the company. For example, Amazon has been a growth stock, and people who invested in Amazon made a lot of money even though there was no profit for a long time in Amazon, right? People who invested in Tesla is one of the best growth stories of the last few years. Now it's doing pretty well from all fundamental aspects as well, but before all this happened, it was a growth stock and not making so much of profit. But because the growth was so phenomenal, same happening with Nvidia right now, uh, that people made a lot of money. But the thing with growth is the margin of safety is not there so much. So a lot of future anticipation of hyper growth is already baked into the current price. So as long as the music is tuning in, like as long as the music is going on, as long as the growth is there, the stock will continue to go up in momentum. But if things stop going super good, then the stock crashes really bad, right? Even if the quarterly result comes out to be good but not great, even then the stock crashes. So as an active investor, we have to be very careful when selecting a growth stock, you know. So Nag, is there any particular growth stock that you like? Or if you don't want to mention specific stocks, what is the, if you can just give us an idea, like growth stocks usually trade at very high PE, right?
Yes.
So even in high PE, what is the range that you are comfortable with, the PE range in growth stocks?
That's very subjective, Abdullah.
That
See,
is
for example, very, very subjective. That that only future will. I mean, that's a hindsight again, right? I mean, the value will be derived in the hindsight. Say, for example, if you see this Vari renewable technologies, right? Okay,
oh my goodness.
and you know,
I've been seeing it every day.
this KPI green, right? Okay.
Right.
So what happened? Initially, we invested some good chunk for some of my clients. Okay, right? And that has been doing exceptionally well. Okay, and I injected some of the funds of other clients as well. Okay. Now what happens? It is going mad
Hmm.
every day, 5% upside. Okay.
Hmm.
And now I got fear in such a way that I don't want the new clients' money going into it,
Right. Hmm.
but that is still going up,
Hmm.
right? So that so-called P is really a tantric one, right?
Wow. Wow. Wow.
Never know it. Okay, you may see the railway stocks are costly even at where, for example, RVNL was, I felt very costly at 150 rupees. Now it is trading at 300 to 80 rupees,
Hmm.
right? So that's the market has to take care of it. So you growth is for me like you have to hold the momentum trend. Okay, you have to really see into the fundamentals sometimes, and you have to give the perfect exit. That's all.
Right. 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 Right.
Okay, so I cannot tell that 100 PE or 150 PE. I know there are many companies, okay, which doesn't have any sound fundamentals, okay, posting losses, okay, they're trading at some good valuations,
Hmm.
right? So PE, there is no range for me, frankly speaking, when it comes to the growth stocks.
Correct. Correct. Mhm. Okay, thank you so much, Nag. I think we had a super, super fantastic session today. We covered so many interesting things today that I'll probably take out. This whole thing will be available on YouTube and LinkedIn as well. But I'll also take out small clips of our discussion on certain topics, and I'll also upload them separately. That'll be fantastic. Thank you so much again for taking out the time.
Thank you,
And
Abdullah.
it's
It was great.
always a pleasure connecting with you. Uh, any last words? Anything else you would like to say?
Uh, I mean, whoever viewing this, I mean, further for the value addition. Okay, see, at the end of the day, we will have only three or four asset classes, right, in our economy, right? One is equities, okay, and second one is your real estate. Third is gold, and probably fourth one will be the so-called risk-free assets,
Hmm.
right? Okay, so you get a big time awareness of how the asset classes are being there in the market. Okay, so you understand what equity is all about. So have an understanding of all these asset classes. Okay, and go to a good financial expert. Okay, if you are young, that is much better. Just go there, build your wealth management framework. Okay, get into the journey. Okay, and retire early or achieve your goals or whatever for that matter, because equity is such a good asset class. Okay, really, I mean, in India specifically, okay, you can achieve all the goals with this avenue.
Right,
Okay.
right, right.
So they're all, that's all from my side, Abdullah.
Okay, everyone, thank you for joining in onto our broadcast. And thank you, Nag, once again. And we'll connect very soon. Thank you.
Sure, Abdullah, thanks a lot, everybody.